Hi there, welcome to Kneppy Invest. It is currently 4:08 p.m. We are right near the end of the closing auction on the 6th of June 2023. 79 years to the day since the D-Day landings. Just realized that right now. Now, I've decided to do a daily update video today simply because of a few announcements that were released today. I'm not exactly sure what's going to trigger me to do a daily update. I'm not going to be doing these videos every single day, but when a company releases a trading update and it's a really negative trading update, I most likely will do one of these videos if I am available. So before we have a look at the announcements today, and in particular, the majority of announcements that have been released over the past 2 days were released today on June the 6th. Let's have a look at some of the announcements that were released on the 5th of June. There were a couple of interesting announcements here. I don't want that one. I don't want recommendations. I want company announcements. And the first announcement that wasn't necessarily price sensitive was by Myer Holdings. And the main reason I found this announcement interesting is because that the CEO and managing director, I think his name, if I remember it correctly, is something like John Brown. I might have this completely mistaken. John King, sorry. John King, he is going to be retiring. And I actually do have a lot of time for John King. He has experience in retail in England. He came over and he seems like he has been doing a job. However, in saying that, I think one of the reasons he might be getting out is because he knows the retail sector is experiencing some problems right now. And they might be continuing to see problems because today the Reserve Bank increased interest rates. Now, I am working from home today, and when I typically do work from home, I pay a little bit more attention to the markets than I usually do when I'm not working, simply because I'm in front of the computer. And I noticed the XGO fell off a cliff at a certain point in time today. And more than likely, that's the time the Reserve Bank announced they're raising interest rates today. So let's have a look. I don't have to do that. I can just have a look at today. So at this point in time, in fact, not right now, but at 3:50 p.m., the XGO was down about 1%. In fact, we can see how the XGO has performed because the closing auction is almost there. So let's have a look at the XGO. And we'll be surprised to see if there's a little bit of a bounce. Not 1.03 down. I'm not sure if that's at closing auction. That should be the final amount down today. But if we have a look at the 5-minute data, or even like the 1-minute data, you should be able to see when the ASX not the ASX, when the Reserve Board or the Reserve Bank announced they're going to be raising interest rates. It all happened at around about 2:30 p.m. You can see in this 1 minute, the XGO fell 0.52%. I'm a little bit surprised that the market is surprised or was surprised by this announcement. I thought it was a good chance, more than 50-50 bet that they would continue to raise interest rates at up to 4.1%, if I remember correctly, highest in 11 years. And I had to tell my ex-partner that when we bought a house back in 2011, we were paying high interest rates back then. It's just that over the past 12 years, we've been really spoiled with low interest rates. So interest rates are getting back to the norm. And yeah, a bit of surprise that happened today. And the market was surprised. I was surprised, the market was surprised. And I'm not surprised the Reserve Bank had raised interest rates. And that's maybe one of the reasons why John King has decided to get out of Myer and retire. And I can't blame him. I would love to retire fully as well. Can't quite do it yet. Anyway, yesterday, another interesting announcement was released at 9:09. And that announcement was from Hills Limited Appointment of Administrators. This is sort of a sad story because Hill, what are they called? Just Hill, something Hills, we'll just call them Hills. And they were the inventors of the Hills hoist, the clothesline. So this is sort of a sad day because the inventors the people who invented the Hills hoist formed a company called Hills. And this is the company. This company sold the Hills hoist thingy back a few years ago. They've been selling a lot of products. In fact, at one point in time, this company had revenue above $1 billion a year. I think this company definitely has been achieving that recently. Let's have a look, though. We'll have an open up. Market cap 12.3 million. Have a look at the financials last few years, historical financials. So revenue 448 million in 2014, all the way down to $47 million in 2022. This is the very definition. Just look at this revenue chart. This is the very definition of dying company. No surprise. We want to be buying companies that have the complete opposite of that revenue chart. Instead of revenue going down, we want to buy companies who have revenue going up through time. So a sad day in regards to the history of this country, that the company that was founded by the Hills Hoist founders back in 1940s, if I remember correctly, that company has gone into administration. And there was one other sort of interesting announcement released yesterday, and that was at 9:13 a.m. A company called Resources and Energy Group, ticker code REZ. I had never heard of this company before. Drilling confirms shallow disseminated nickel sulfides. And the only reason this is interesting was the reaction from the market. And because I'm talking about it, we already know the reaction from the market was a beauty yesterday. Share price up 175%. Share price closed at 3.3 cents. A little bit of selling today, which is understandable, but I do get nervous when you see a lot of selling, and there was a fair bit of selling today, and share price down is 2.6 cents. 2.6 cents. And this is understandable because if we go back in the past, even June last year, the share price was at these levels. So those people, those shareholders who bought in higher levels previous to June last year have seen the opportunity to get out. And that's why we do see some selling pressure today. And if we don't see any increase in demand, there is a possibility share price could fall further from here. Fairly similar to what's been happening with a company called Zilera Therapeutics. Share price just keeps on falling. Well, fell 3 days in a row. Looks like a little bit of maybe the bottom has been reached for that company. And the main reason for that is all these shareholders who bought in July last year when we saw the share price rise, and they would have been holding for about 5, 6, 7 months, waiting for the opportunity to get out. They had the opportunity, and there wasn't a lot of demand for these particular shares. And that's why the share price just plummeted from about $3.25 all the way down to $1.62. So it halved. So that's really all the interesting announcements I did see yesterday. I might have missed some other ones, but I didn't see any significant reaction from the market in these companies. But then we get to today, and that's when we do see some interesting announcements. In fact, the last interesting announcement that I have seen was the most interesting announcement, in my opinion. However, the day started well for A2 Milk and Synlait Milk shareholders because they received SAMR re-registration China, market access secured. As you would expect, share price should have rallied. Well, share price of A2 Milk did fall during the day, so a little bit of selling. But Synlait Milk share price up 14.8%. Let's just have a look at those charts for these two companies. I was a little bit surprised A2 Milk didn't rally as much, but again, the share price actually did reach $5.70 at one point, and a lot of selling came in. Why did selling come in? Just look at the chart. So shareholders who bought at high prices saw the opportunity to get out at a high price today, and they decided to sell. You could have expected the same thing from Synlait Milk, because share price of this company has been cratering, but some shareholders, some maybe speculators, saw the opportunity, saw this as a sign that things are not as bad as what Synlait Milk have been suggesting, and the share price has rallied from its lows. So the low share price low for this company, $1.28 on the 15th of May, current share price $1.69. But the share price of this company is still in a downtrend. So that was the first interesting announcement. More of a reaction for Synlait Milk than A2 Milk. EBOS Group, which I will do a video on, went into a trading halt. And the trading halt was sort of an interesting read in regards to what it was. And this was in relation to another announcement from another company. So EBOS went into a trading halt regarding the Australian Chemist Warehouse contract, which is a fairly big contract for EBOS Group, which we'll see in a second. So that was a second interesting announcement. Then Austal Limited, ASB, response to media speculation in regards to chatter, rumors of a takeover bid. So recent media speculation regarding possible corporate activity, which is another name for someone wants to buy our company or possibly wants to buy our company. This is the best way to see a share price rise. Maybe not the best way. Share price did initially rise, got up to about $2.35, and then we saw the share price pull back during the day. I never pay attention to these sort of announcements, media speculation about a takeover bid or corporate activity. You just never know what's going to happen. But in saying that, Austal share price is still in a nice little rally because of a massive contract they won. But a fair bit of selling in the last few days, even though we have seen good volume. And the main reason they're selling again, it all comes back to resistance. All comes back to shareholders who bought in higher prices in the recent past, who now see the opportunity to get out. So this is just a supply of shares coming onto the market, and there's just not enough demand at this point in time. And that's why we've seen a little bit of selling the last few days. Although you could say with this sort of one-day candlestick, sort of like what do you call it? It's not a spinning top. I forget what they call it. There's sort of a fight between the bulls and the bears, and it's an even fight, no one winning. So that's sort of the candlestick where you get high tail, and the high tails to the up and below, or to the above and below the main body of the candlestick. Anyway, so that's Austal. Maybe in the future another company will take them over, just a maybe at this point in time. Another company announcement I always have a look at is Raiz Invest, May 23 key metrics. And probably the most interesting, I always look at this announcement. They release this every month. I just want to see some good growth in customer signups, investment accounts, active customers. But the 1 month % movement is negative in regards to the global funds under management, negative 0.5%. Growth of 11.6% in the last 12 months. Funds under management in Australia down, average account down, active customers actually down in Australia as well. Retail down, but superannuation up. I think they also have Indonesia, that's negative as well, and Malaysia negative as well. So not probably the best read or best announcement from Raiz. Let's see what the market reacted. Not much of a reaction from the market. And I think the main reason behind that is simply because the share price is down a lot. Share price in a beautiful downtrend. I'm not sure if you can call a downtrend beautiful unless you're short. The share price has fallen from $2.13 to 36.5 cents. So not much love in this company right now. You'd say the market cap of this company is 36 million. So it looks like the growth phase may have come to an end, or just because you've seen a contraction in the numbers in 1 month doesn't mean the growth of the company has finished, but it's not a good sign. Now on to some good news. So finally some good news, and that's Sigma. And this is sort of related to that EBOS Group. And this announcement was released at 8:21, so let's go up to it. Sigma Healthcare awarded Chemist Warehouse supply contract. Now this is a little bit different from the EBOS Group. Fairly similar name. So this EBOS Group was Chemist Warehouse. This is, or was it Australian Chemist Warehouse. This is Chemist Warehouse for the supply of both pharmaceutical benefit scheme medicines and fast-moving consumer goods, FMCG. There is a amount here. Sigma estimates that total sales of products to Chemist Warehouse will generate a minimum of $3 billion in revenue in the first full year of the contract. $3 billion in revenue in the first full year. That's a significant amount, and you would expect the market to be excited. So let's have a look at the market reaction. We'll put it up on TradingView, and then we'll have a look. So TradingView says 75.5 cents, up 18.9%. And if we have a look at in ComSec, the reason I'm looking at ComSec because ComSec is absolutely up to the date. So the share price closed for Sigma at 77.5 cents, up 22%. So in the closing auction, it was bid up. So a really good day for Sigma. And this is really interesting. So I haven't looked at this chart yet, but look where the share price has closed just above. In fact, we'll look at the weekly chart so you can see a better picture of this. So Sigma Health's share price has been trading in a range between about 43 or so cents and about 75 cents since 2018. So 5 years, the share price of this company has been trading in a range until today. Today, the share price of this company went above the top of the range. Let's have a look at the one-day candlestick. Here is the top of the range, sort of like the resistance level. Where did the share price just finish? Just above it. This is a potential breakout. So put this company on the list for a potential breakout, and pretty big volume as well. So the market loved this announcement. And no wonder they loved it, because $3 billion of revenue in 1 year, that's a minimum. And probably the other thing to take, maybe not take note, but to understand is the margin they might get out of this contract. I have no idea what the margins are. It could be minuscule margins. And so Sigma Healthcare might not get much out of this particular contract. So even though it's $3 billion minimum, Sigma Healthcare might not get much out of it. So that's a very important point, is you always have to look at the margins involved as well. They could have won this contract because they put in low margins than their competitors. Simple as that. So that's Sigma, and keep in mind that company, that they have Chemist Warehouse, and then we'll talk about EBOS Group in a second. ASX had an investor day today, and I do know the share price of this company down, so there must have been something negative in the investor day. The market did not like it. Look at that 1 day, massive volume as well. So this was a negative. This is the very definition of a negative day. They released something that was negative to the market, and this is sort of a sell signal. If I was holding ASX shares, this would be a sell signal. I have no intention, have not had any thoughts to be holding these companies or the shares of this company. Dividend yield 3.5%, price earnings ratio 40% or 40, which is way too high for this company. So that's Sigma Healthcare and ASX Limited. Next company was, and this is something I always look as well, at 8:55 p.m. or a.m., Magellan Financial Group, funds under management, May 2023. So I am always looking at these sort of announcements as well, because Magellan's funds under management have been dropping over the past year, 18 months, and they continue to fall from 42.7 billion to 41.4 billion, experienced net outflows of 500 million, which included net retail outflows of 500 million, and net institutional flows were flat. So you would expect a little bit of a negative reaction from the market, but I wouldn't expect it too much, 0.13%. So sort of the market was expecting this sort of funds under management result from Magellan. Now on to, actually first, before we have a look at the major announcement of the day, back to EBOS Group, if I can find it here. So EBOS and Chemist Warehouse. Thought one of them was Australian Chemist Warehouse. So let's have a look at the Sigma. Are these the same company? That's what I wanted to know. When I saw these two announcements, I want to know if they were the same company. So EBOS Group has been formed by Chemist Warehouse, and Sigma has been formed by Chemist Warehouse. I wonder if this is the same thing. I don't know anything about EBOS. I thought they were an accounting firm. EBOS Group, there should be some sort of about. EBOS Group is the largest and most diversified Australasian marketer, wholesaler and distributor of healthcare, medical and pharmaceutical products. Okay, completely wrong in regards to EBOS Group. So it looks like the contract that Sigma won, they won it over EBOS Group. Now, EBOS Group currently generates approximately $1.9 billion in revenue annually from the contract. And remember, Sigma said $3 billion of revenue. So I wouldn't absolutely fret about this if I was an EBOS Group shareholder, because they have over $10 billion of revenue, but it's a little bit of a hit, and a little bit of a hit is equal to, let's see how the market reacted, EBOS Group, 12.3%. That's probably understandable. I can sort of understand that. That it is a little bit of a hit, but it's not a destructive announcement from the company. And maybe, again, the reason Sigma won it was because they went, what do they call it? They went under the margins that EBOS Group were providing or whatever. And the share price, look at EBOS Group. So look at the lows back in October last year. Share price got down to about $32. Share price of EBOS Group is sort of in that zone where we saw those lows, which is sort of understandable. So there were some people who saw the share price get down to those lows we saw back in September, October last year, and have seen an opportunity to buy into EBOS Group at a low share price. Now, if the share price falls below about $31.50 and stays below that for a little bit of period of time, that would be negative. Now, let's have a look at the weekly chart for this company. I will be doing a video on this company, but I don't know anything about it. And one of the reasons I'm doing a video on this company, just look at the chart. Beautiful chart. Share price now, for a very brief period of time, fell below the 150-week moving average. It has not done that very often. And when it does do that, it falls below it, not that long, for a sparing period of time. So possibly this was a buying opportunity today for EBOS Group. And again, I don't know anything about the company. I thought they were an accounting company. Got that completely wrong. So that's those. And now on to probably the most interesting announcement in terms of, and that announcement in terms of what I look for. And I am always looking for profit upgrades, profit downgrades, or trading updates. And this particular announcement was at 9:41 a.m. Here it is: Baby Bunting trading update and financial year 23 guidance. So straight away, I knew more than likely this was going to be negative, and it was negative. It was a humdinger of a negative announcement, and even the numbers in themselves are negative, but it's just the commentary from the management. And I'm just going to try to find exactly. So here is the bit in the commentary that I went, wow, this is really negative. So the key store take promotional event, which has recently commenced, has seen trading both in stores and online well below expectations during this short period. Since launch, sales have been unprecedentedly low, with comparable store sales of around negative 21%. And this is the change in guidance in regards to net profit after tax. So they were expecting it to be between 21.5 and 24 million, but now they expect profit to be between 13.5 and 15 million. This is the very definition of a profit downgrade. And let's see how the market reacted. It was down as much as 20% during the day, down 16.8. So there's a little bit of a rally, not much of a rally. Closed at $1.48. I wrote down when I was going through the announcements, $1.51 was very important level for this company. The high today was $1.51. Again, technical analysis works. It works a treat. So why is $1.51 very important for this company? And this will make perfect sense in a second. I have little alerts coming up because I've got Microsoft Teams open for work, but I can ignore it. So this is Baby Bunting. So let's go back to, we'll get rid of this and put it down here. So let's go back to COVID-19 panic. We'll have a look at the daily chart as we go back there. So let's go back to, was it March 20 or so? Was the worst day, the low in the markets. So the low on 19th of March, the day before that, the low on that day, what was the low? I shouldn't even have to tell you. The low for Baby Bunting during the darkest point of the COVID-19 financial panic was $1.51. That was on the 19th of March. On the 20th of March, it was $1.53. And then on the 23rd of March, the low was $1.51.5. So again, technical analysis works. And there would be a lot of traders, maybe some investors who knew the low for Baby Bunting during COVID-19 financial panic was $1.51. So what was a high today? $1.51. Let's go to today. Actually, we'll draw in the line, put in the line. And we'll extend that line. There it is. Share price for Baby Bunting closed below that very important support level. That level, $1.51, was support. So when you see the share price get up to $1.51, test that level and then pull back. That is the very definition of the market testing that level, and it failed. That sort of, maybe you could say it succeeded, and then share price pulled back. So now you have a better not better, you have more confidence that this support level has now been broken. Now, I want more confirmation. Don't want to see the share price get above $1.50. If the share price gets back above $1.50 in the next few trading days, that means this break is sort of a false break of this support level, and the support level has held. Now, the thing that could cause that is value investors. They see the share price below COVID-19 lows, and they think there might be some value in this company at these levels. Last time the share price was this low was way back in 2018. And the share price was very briefly below this level. So if you just extend this line, so it went below this level in November 2017 and then went back above it in July 2018. So for about an 8-9 month period, the share price was below $1.51. So that's why I would expect a little bit of buying from value investors right here. They will see some value. Now, if the share price falls below $1.25, that would be really negative because that's the next really strong support level for baby bunting. The reasons that's strong, it's really simple. Just take the lows in that period when the share price was below $1.25 or $1.50, 51 cents. Look how many times the share price of baby bunting tested $1.25. 1, 2, 3. In fact, it was first time it tested it and it bounced. So that's sort of developing support level. Then 1, 2, 3, 4. In 4 days, maybe even 5 or 6 days, it tested $1.25 and held. So that's testing that succeeded and it held, which means that level, $1.25, is stronger than if it didn't hold. So the more times a level is tested, the stronger it becomes. And that is the all-time low share price for baby bunting. So not far to go from here. And to be honest with you, at a share price of $1.48, markup of, it's not 245 million, I can tell you that much. We'll go to market index. More than likely, baby bunting was one of the worst performing stocks. Well, definitely not the worst, gee. Baby bunting has a markup now after today's down day of 199 million, just below 200 million. I think there might be some value here, particularly if you are a long-term holder. Now, one of the interesting things about baby bunting is I would have thought this sort of retail company would be more defensive. People are more willing to pay things or pay higher quality things for their babies. But obviously that's not true when it comes to Australians. And I think this might be more of a hand-me-down culture. So not only if kids or parents are having more than one kids and they just hand down their clothing or whatever from one kid to another, if a parent of newborn baby knows some other parents who have had children, not going to have any more children, they will get their stuff. Or maybe there's also a second-hand market out there for baby stuff, which there wasn't before. And that this sort of environment with high interest rates, stress with mortgages, there is that potential that second-hand market, that hand-me-down market, is really not destroying baby bunting, but it's really having a negative effect on baby bunting's financial performance because parents aren't buying new things from baby bunting. They'll rather buy it secondhand for cheaper prices. So let's have a look. I've got to do this within the next 5 minutes or so. Let's have a look at the best performing companies on the XS. Actually, first the XAO. See if there's anything I've missed today. Yeah, nothing to baby bunting again. EBOS, we've already talked about them. AMA Group, ASX, I've already talked about BrainChip down a lot. Paragon Health, Adairs, understandable Adairs. It's had a negative announcement last week. Accent Group. In fact, Accent Group is starting to look interesting. But the market knows there's a good chance that Accent Group is going to release a negative announcement. Why? Just look at we've got to get to, look at that chart. Share price of Accent Group's fallen from $2.63 to $1.65 in about, we'll say, a month and a half. So the market is really worried about this company, just like many other retail companies, probably Lovisa. Let's have a look at Lovisa. P/E ratio of this company was huge, and it has fallen. P/E ratio of this company is still 32. Probably the highest quality retail company on the ASX. Just my opinion. And let's have a look at any good performance on the XAO, Sigma, Synlait Milk, we already talked about, A4N, Trajan, Bannerman, which is pretty sure BMN's Bannerman, which is uranium, Centaur, which is nickel, Weebit, that's DPLO, which is uranium, premium. All right, so nothing too interesting there. And let's have a look at top losers and top gainers on the ASX according to market index. Sovereign Cloud, see anything else. Westar, which has been fairly volatile recently. Resources Energy, I've already talked about that. Was that the company yesterday? Yes. And I'm looking for, what I'm doing here is looking for any bigger companies that I haven't seen. And most of these I've already covered in the, looking at the XAO, and otherwise nothing too exciting there. And I totally skipped past the top gainers. So let's have a quick look here. Adavail, MacArthur. I have a quick look at some of these to see if they might have released interesting announcement. But they're most of these companies have a low markup, and Sigma's there. Qoria, don't know what that company is. $238 markup. Is that a new listing or a change of name sort of a company? If you don't know if a company has changed a name, there is a website, something on the ASX, which goes through name changes. Sometimes I just have a look at market index. Go through the old announcements, go back, 4 pages, maybe even more. Have a look. I'll go all the way back to the start. Family Zone. So Family Zone has changed their name to Qoria. I don't even know how to pronounce that name because there's no U there. Family Zone has changed their name. It's good too. No, I don't follow Family Zone all that closely, as you can tell. And really, that's all I'm going to have for you today. Like almost a 35-minute video. If you have any questions about any companies I featured in today's video, I'd love to hear from you. So leave in the comment section of the video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.